Hi everyone, I'm Nuraienah and today together with my friends,
I'm Syazwan.
And I'm Claerina.
And I am Syazwan.
we are discussing one of the biggest financial collapse in digital history, the FTX Crisis 2022.
Imagine this, you open your crypto app, you try to withdraw your money, and suddenly it says withdrawal suspended. Within days, 32 billion US dollar in value gone. But here is the real question. Was this just a crypto failure, or was this a classic financial crisis happening in a modern digital form?
Honestly, when I first read about it, I thought it's just crypto volatility. But after studying it, I realized it was different.
Yes, it wasn't just market fluctuation. It involved governance failure, misuse of funds, and liquidity collapse.
And from an international finance perspective, it's actually a textbook example of liquidity risk, financial contagion, and regulatory arbitrage.
Exactly, so today we will break it down step by step. What happened, when it happened, how it spread globally, and what we can learn from it. Let's start from the beginning. Claerina, can you explain what FTX actually was?
Sure, FTX was founded in 2019 by Sam Bankman-Fried. Within just 3 years, it became the second largest cryptocurrency exchange in the world. By early 2022, it was valued at 32 billion USD, according to the Bank for International Settlements. It was based in the Bahamas but served customers globally, including the US, UK, Singapore, Japan, and many more.
And they had strong branding too. Celebrity endorsements, sports sponsorship, political connection. Everything looked stable and trustworthy.
So, what went wrong?
The turning point came in November 2022. Reports revealed that FTX had transferred billions of dollars of customer funds to Alameda Research, a trading firm closely linked to FTX. This is where the first major violation happened, asset segregation failure.
Meaning customer deposits were not kept separate.
Exactly. In finance, exchange must keep client funds separate from operational or speculative activities. But according to John J. Ray III, who took over during bankruptcy, this was a complete failure of corporate control.
So basically, customers thought their money was safe, but it was being used for high-risk trading.
Yes, and that created a very fragile financial structure.
Then came November 6th, Binance announced it will sell its FTT tokens, and that's when the winning started.
FTT was FTX's own crypto token, right?
Yes, and Alameda held a large portion of its balance sheet in FDT. So, when Binance said they were selling, the price dropped sharply.
And here is where international finance theory becomes very clear. When customers saw the token collapsing, they rushed to withdraw their money. This creates a liquidity crisis.
Can you explain liquidity risk briefly?
Liquidity risk happens when a financial institution cannot meet short-term withdrawal demands, even if it appears solvent on paper. Within 48 hours, billions of dollars were withdrawn. FTX simply didn't have enough liquid reserves. It became a digital bank run.
Just like traditional bank runs, but faster because it's online.
Exactly, no physical queues, just one click.
One of the most striking aspects of the FTX crisis is how quickly the entire situation unfolded. Unlike many traditional financial crises that develop over months or even years, the collapse of FTX happened in a matter of days. Understanding the timeline of events helps us see how rapidly investor confidence can disappear in modern digital financial markets.
The crisis began to gain global attention on November 2, 2022, when reports revealed that Alameda Research, a trading firm closely linked to FTX, held a large portion of its assets in FTT, the cryptocurrency token created by FTX itself. This revelation raised serious concerns among investors and analysts. In financial markets, heavy reliance on internally created assets can create significant instability, especially when the value of those assets depends largely on market confidence.
As this information spread across the cryptocurrency community, many investors began questioning the financial strength of both Alameda Research and FTX. The situation became even more alarming when it was revealed that Alameda's balance sheet was highly concentrated in FTT tokens rather than diversified assets.
This meant that the financial health of Alameda Research was closely tied to the value of FTT. If the token price were to decline significantly, the value of Alameda's assets would also fall dramatically. Such dependence created a fragile financial structure that could easily collapse under market pressure.
The crisis escalated further on November 6, 2022, when Binance, the world's largest cryptocurrency exchange, announced that it planned to sell its holding of FTT tokens due to concern of risk exposure. This announcement triggered widespread panic in the cryptocurrency market.
Investors interpreted Binance's decision as a signal that confidence in FTX was weakening. As a result, the price of FTT began to fall sharply. At the same time, thousands of customers rushed to withdraw their funds from the FTX platform.
Within just a short period of time, withdrawal requests worth billions of dollars were submitted by users across the world. This sudden surge of withdrawals created a severe liquidity crisis for the exchange.
Because FTX had already transferred large amounts of customer funds to Alameda Research for trading activities, the exchange no longer had enough liquid assets to fulfill those withdrawal demands. What followed was a rapid loss of confidence among investors and market participants.
Between November 7 and November 8, the situation deteriorated even further. As news of the liquidity problem spread, more users attempted to withdraw their funds simultaneously, intensifying the pressure on the exchange.
In an attempt to prevent a complete collapse, FTX began discussion with Binance regarding a potential acquisition that could provide emergency financial support. However, after conducting preliminary evaluations of FTX financial condition, Binance decided not to proceed with the deal.
Without a rescue agreement and facing increasing withdrawal demands, FTX financial position became unsustainable.
On November 11, 2022, FTX officially filed for Chapter 11 bankruptcy protection in the United States. At the same time, Sam Bankman-Fried resigned as CEO, and a restructuring team was appointed to oversee the bankruptcy proceedings.
The rapid collapse of FTX demonstrated how fragile confidence can be in financial markets, particularly within digital asset platforms where transactions occur instantly and information spreads rapidly across global networks.
Ultimately, the timeline of the FTX crisis illustrates how a combination of weak governance, liquidity mismanagement, and declining investor confidence can lead to the sudden downfall of even the largest financial institutions.
But why did this affect the whole world?
Because FTX operated globally, millions of users across different countries were exposed.
Countries like the United States, UK, Singapore, Japan, South Korea all had investors using FTX.
And this is where the concept of financial contagion applies. When one major institution collapses in an interconnected system, shock spreads rapidly. Bitcoin prices fell, Ethereum dropped, crypto-related companies faced losses. According to BIS 2023, global crypto market capitalization declined sharply.
So even though it started in one company, the impact crossed borders immediately.
Another interesting effect was in foreign exchange markets.
Yes, there was a short-term flight to safety.
Meaning, investors move their money into safer currencies.
Correct. In times of uncertainty, global investors shift towards reserves currency like the US dollars. This aligns with international finance theory. Increased global risk strengthens demand for safe haven assets.
So, even though FTX was crypto-based, its invention brought financial sentiment.
Which shows how integrated modern financial markets are. Now let's talk about regulation. Why didn't authorities prevent this earlier?
Thus, FTX operated across jurisdictions, Bahamas, United States, global users. This creates regulatory arbitrage.
Meaning they could take advantage of the regulatory system.
Yes. When regulations is fragmented internationally, firms can operate in areas with lighter oversight. After the collapse, the U.S. Department of Justice filed criminal charges, and the SEC charged Sam Bankman-Fried with fraud. But by then, the damage was already done.
So, enforcement was reactive, not preventive.
So what we can learn from this?
First, transparency and proper governance are essential. Innovation cannot replace accountability.
Second, liquidity management is critical. Without a non-liquid reserve, even like firm collapse quickly.
Third, international coordination is necessary. Digital finance operates globally, so regulation must also be globally coordinated. The Bank for International Settlements emphasized stronger cross-border supervision to prevent similar crises.
The FTX collapse was not just about cryptocurrency, it's about trust. A $32 billion company collapsed in less than a week, not because of global recession, not because of a war, but because of a governance failure and liquidity mismanagement. It reminds us that no matter how advanced financial technology becomes, the core principles of international finance still apply. Liquidity, transparency, regulation, confidence. Without that, even giants fall. Thank you for listening to our discussion on FTX Crisis 2022. This is Nuraienah together with
Claerina,
Nursyazwanie,
and Syazwan.
Signing off.